India's retail inflation took a surprising turn in June, rising for the first time in 5 months, and the culprit, a sharp spike in food prices. Annual retail inflation hit 5.08% in June, up from 4.75% in May. This jump was mainly due to food, which shot up 9.3% thanks to the heat waves affecting vegetable crops. Interestingly, just a month earlier, inflation had dipped to a 12-month low of 4.75%, even though food inflation was still high at 8.7%. Now, let's break down the food inflation, which came in at 9.3%, the highest in 10 months. Vegetables and pulses saw double-digit inflation, with vegetables soaring 29.3% and pulses climbing 16.1%. Pulses have been experiencing double-digit inflation for 13 consecutive months, and vegetables have been in the same boat for the 8th month straight. From May to June alone, vegetable prices surged by 14.2%, while pulses were up 2.5%. On the other hand, inflation in meat and fish products came in at a 4-month low of 5.4%. On a brighter note, excluding food and beverages, inflation across all other categories stayed below the 4% mark in June 2024. Non-food item inflation remained under control, with the core CPI holding steady at 3.1%. Despite these food price spikes, there's hope on the horizon. Improved rainfall and a favorable base effect from last year's high inflation might help keep inflation in check in the coming months. Economists are predicting that the RBI MPC committee will not initiate a rate cut before December 2024, despite the seasonal inflation bump up to over 5%. July is expected to see a significant increase in core inflation, driven by a seasonal rise in housing prices and higher telecom prices from July. Annual inflation might stay low throughout the second quarter of fiscal year 25 due to base effects, but the MPC will be closely watching the monsoon and food inflation trends. Given the current growth comfort, we see the earliest window for rate cuts opening in December 2024, though this could be delayed if growth remains strong or inflation surges more than expected. This cautious stance aligns with the RBI Governor Shaktikanta Das's recent comments, where he maintained a hawkish tone, saying, "We are optimistic and confident about moving towards 4% inflation, but progress is slow." On the flip side, the US inflation came in at 3%, along with a cooling labor market having raised the expectations of the Fed to start its easing cycle by cutting interest rates in September. In summary, while there are various factors at play, the consensus is that the MPC will remain cautious and vigilant, with the earliest potential for rate cuts not expected until the end of 2024. While India's CPI inflation is higher than the US, the RBI might not be following the US path of rate cuts due to their focus on controlling food inflation. This difference in inflation rates and policy approaches highlights the unique economic situations of each country. Having said that, this is me, Rahul, signing off. Have a great day and stay safe.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.